Hello, my name is Shedra Quals, and in this video I'll be showing you the best way to apply multiple time frame analysis. We'll also look at the mistakes made by most traders, and I'll show you the best approach in applying multiple time frame analysis. Without much further ado, let us get started. Multiple time frame analysis is the technique of analyzing several time frames of the same asset before entering a trade. It involves looking at 3 or 4 different time frames to identify the general trend and find the best entries. One mistake most traders make is to focus on one time frame and never leave it. And they are so logged into the time frame that they forget about the bigger picture happening in the market. Multi-time frame analysis involves either applying the bottom-up or top-down analysis. Top-down analysis simply means looking at higher time frame, say from 4 hours down to 1 hour, 30 minutes, then 5 minutes. While bottom-up simply means looking at a time frame from 5 minutes, 30 minutes, 1 hour, and 4 hours. But the best approach is to look at it from the top-down analysis. It gives you a broader view of what's happening in the market, and you'd understand the direction in the market. Another mistake some traders make is constantly jumping from one time frame to another time frame without much of a plan. Those traders are mostly driven by emotions and they trade very impulsively, and at the end they blow off their trading accounts. Another mistake made by traders is to apply the bottom-up multi-time frame analysis. And what do? They typically start their analysis on the lowest of time frames and then work up to higher time frame, which is very wrong. So what is the solution? The best approach is the top-down multi-time frame, where you will start on the higher time frame, you look at the bigger picture and perspective, and then you slowly build your trading plan by going lower until the execution time frame is reached. So as you can see, I have 4 time frame here. I have 4 hours, 1 hour, 30 minutes, and 5 minutes. So I'm looking at 4 time frame, and the bigger picture is seen here. This is 4 hours. It's an uptrend, and as you can see, same applies here on 1 hour time frame, and it also corresponds on the 30 minute time frame. But the 5 minute time frame is looking like a downtrend, but this is not a downtrend, it's just a correction. After a while it's going to pick up back, so we wait for it to pick up, then we join for the uptrend. So what do? We will look at 4 hours, make sure it's going up, 1 hour also up, 30 minutes still up. Then once the 5 minutes correspond, then we join in for a trade. Take for instance, only focusing on the 5 minutes time frame. Looking at this chart, you'll feel it's a downtrend, but it's not. If you place your trade as a down trade, you're going to lose. This is the reason why some people lose money. They focus on a single time frame. Take for instance, GBP USD 5 minutes time frame looks like the market is going down, and once you jump in and you place a sell trade, most likely you will end up losing, because on the larger time frame, GBP USD 4 hour candle is experiencing a pullback, meaning it's likely to continue the previous trend, which is an uptrend, and 1 hour candle also confirms it, though it's experiencing a pullback, but on the longer time frame we know it's going up. So if you place a sell trade, on the long run you're going to end up losing. So this is why multiple time frame analysis is important. It will only allow you place trade when all the time frame corresponds. When you have uptrend on the 4 hour candle, uptrend on the 1 hour candle, uptrend on 30 minutes, and uptrend on 5 minutes, then you are good to go. There is high chances of you making profit at the end of the day. In conclusion, The top-down approach is a much more objective way of doing your analysis because you start with a broader view and you work your way down to the smaller time frame. So if you can inculcate this into your trading, there are higher chances of you making profit in your trading career. Now that you understand multiple time frame analysis, make sure before you place your next trade, you check at least 3 to 4 time frame to have a broader view of what is happening in the market. And as you do this, you will discover that trading will become so easy for you and you become a better trader. And this is the end of this video. I will see you in the next class. Take care.